Hello there, this is Trader K. I'm back with a new video from Trade Like Gann. So the last video was about the initial actions and analyzing that were necessary, or to me that is necessary to trade any market or any new market that we are attempting to trade, right? So from that point we left one important point that I have to make a separate video for this: custom time range high low summary. So what is this? Let me pull up the book first. So this is the chapter that we were talking about, right? Here you can see the result of the statistics, the entire 35 swings. So let me just take the next example, which is even easier. Okay, so there is like 14 highs in 69 years in the January month. Okay, so what this means is importance. Okay, so this is what we are trying to achieve, and we have showed so far how we are doing it on monthly and different daily structures. But now since we also do day trading and also intraday scalping and all those stuff, and we must know the information in almost the same structure in the day trading frame as well, or you can say in a electronic time frame as well, like from 9:30 to maybe 1600, or let's say 4 p.m., right? So when the market opens and the market close, maybe this could be a case. Maybe the London session, how the London session is reacting. So what I'm trying to explain is, if I show you a couple of examples, then you'll understand it way easier. So for example, let's take this chart, drop it down to 5 minutes. Okay, so this is a particular time range that is more important to us. Let's take the entire, let's try to take this one from 9:30 to roughly 1600. This is the zone. Okay, this is the zone. Let me just take a box and you'll understand, I hope, even better. This is the time range. What I'm trying to show is where most of the highs and lows in the market occur, and we can trade. Okay, like let's say all of us, we cannot trade the entire day, or even that is not even been being profitable as well. So let's say I want to know where the highs and lows occur in this time range. And by the way, this is a pretty important thing for anyone to know if anyone wants to trade these markets in intraday fashion. Okay, so if you want to get in and get out on a single day, you must know where is the low, where is the high on maximum days, or let's say where are the probabilities of having highs and lows. So uh, we know from experience and let's say some testing that every time market comes to this kind of highs, it reflects a bit of we can say resistance, right? So this is what a barrier of specific price, right? There is also time barrier. What this means is, now this was horizontal line, and the thinking was actually horizontal. Now let's start thinking about the vertical zones. Let's say exactly after 12, let's say exactly after 12, we see a slowdown in the speed of market. Okay, it does not matter where it is, it does not matter what trend it is. What matters is only exactly after 12, are we getting slow or not. So these are relatively easy to understand but also important to know before you trade. Some of these are very easy numbers, that's why I'm choosing the number like 12, because we know why market goes and stops around that time. It's close to lunch, right? So things like that, I want to see the highs and lows and plot them in a single graph so that we can have a good estimation. Okay, so for that, what we have done is built a very small program, but let me just explain what it does. Okay, what it does is, from a certain point in time that you can preset, like let's say from 9:30 to 4, like 6, 6:10, or let's say 6, okay, 1600. Uh, if I just give it this time range, what it will do is see the entire data and find out where is the highest high and where is the highest low. In this scenario, this is the highest high and this is the highest low. Now it will just uh, keep the record of these two. Okay, that is how it will count, like maybe whatever range of data you give it, where was the highest high and the highest low, lowest low, I mean. Okay, so that is how I can have a estimation or idea about where most of the time the highs and lows are occurring. Also, let me uh, say one more thing about it. It's not about finding exact high and low timing in the market for this. Rather, it's a tool to stay cope up. Okay, to stay cope up with the market. By this, what I mean is the highs and the lows, the times of highs and lows can change depending on time to time. Okay, market to market and situation to situation. Like let's say, if you gather 10 years of data and find out on every single day, every single trading day of the 10 years, the highs and lows are going to be extremely different. But if you see the FOMC highs and lows of the 10 years, that could mean something, right? So I'm just leaving it to this point. So also we need to see into the future by looking at the past, right? So like last 3 months can have a good impact and understanding of what is happening, where the market is shifting, right? So we are using these tools to be the first to understand the shift. That's all. Okay, that is all, but it can be used in many ways. So I present you all a simple program called Market Horizon. Okay, This is an intraday high and low frequency analyzer. Okay, so you'll find the needed information to use this tool, the link, the username, password, whatever that is necessary in the description box of this video. So we need to give it some data. So let me just give it the data. So the data has to be in CSV file format, okay, and the column format is written here. It has some sample data if you want to load, okay, and the time range depends on you. Let me take just 1 year of data, a small range for reference, 9:30 a.m. to maybe, let's take 1200 p.m. I think that much data is going to be enough. It will take a little bit of time since it has a lot of data to process. So just wait for a few seconds. Okay, looks like we have a result here. You can click this button to download this chart, and also you can download this to Excel sheets. It contains the results based on which the chart has been generated. Okay, by this what you can do is zoom in and out, okay, and move it with this and just click this one to reset. You don't want to save it from here, you want to save it from here. Okay, if you need this chart, save it from here or take a screenshot simply. Okay, so let's try to see what it's doing at this point. This is just a simple example of the AM session or the first half of the New York session of Nasdaq 100. Okay, we can see a chart, a volume bar chart, maybe a bar chart where the blue ones are the highs and the red ones are the lows. So let me just zoom in a little bit here. What this shows, there is a tendency of the market of putting highs around 9:30 to what, uh, within this 5 minutes, the first 5 minutes, there is a high probability of market creating a high rather than compared to low. If we talk, there is a higher probability of the market making a high and falling down, okay, from that exact point and keeping the high till that, till at least this much time, what, 12 p.m. Okay, so once the high forms there, most likely that high is not going to be tapped until we hit the lunch time. Okay, and about the lows, it's not as uh, confident as the highs, but also there are 28 lows. Okay, there are 45 highs and 28 lows. You see, there is also a matter of understanding that you need to have before analyzing this chart is which time zone are you testing. Let's say I took 1 year of charting, 1 year of time. Okay, is that zone mostly a downtrend? This is a question that the first thing that comes to my mind, because why there are more highs that is intact. So if there are more highs intact, what this means is a high formed and then market came down, and there is 45 times that happened, right? So that's how you also need to interpret, you need to learn the data in a manner so that you can uh, understand and interpret the market behavior well. Also, we see there is also a probability. There is also a probability which is higher than others, like at least the center zone, that around the lunch time, like before 12 p.m., we see a considerable amount of highs that has been formed. Again, the lows are relatively less. So was the market in a downtrend? That is one question that we should ask and see in the market, right? Now, one question that you might have, how do I interpret the important zones? Let me give you an idea. You see these lines that I am eliminating, okay? So there are these highs, these peak time zones that are important for you to understand and observe, okay? These are the 4 time zones. So let's mark 9:30. The first one is just 9:30, which is the beginning zone, and there is also definitely a lot of importance. The next one is 9:45. Okay, I hope you understand why 9:45. This is the first 15 minutes of the market, okay? Very important. The next one, 10 a.m., the news releases, right? And then 12, exactly 12, roughly around 12 p.m., right? The starting of lunch hour, right? From when the market starts to become slow, or a single session we can say has completed, right? So this is how you want to understand and decode this market, and these informations can help you in intraday trading and scalping way too much than I can explain here. Okay, so be confident and also try to be understanding about the market, and don't be stiff to learn new things. Okay, I finished this video exactly here, and I have a new video that will come really soon. Have a great day, and we'll talk soon.